You have the Asia Credit Conference that's actually happening for you guys in the next 2 days or so. What do you think is going to be the top of the agenda this time?
Well, I think people, as much as the market has been very choppy over the last couple of months, I think people still have money to put to work. There's liquidity, still have to find a place to park. And that is really the gist of the whole conference, that, trying to explore various opportunity. Either we're talking about the US dollar bond market or going out from that, core market, going into securitized product, looking at, distressed credit, looking at private credit, or looking at the DM credit. This is the kind of opportunity we are exploring, and this is another exciting time to showcase what JPMorgan have to offer.
Okay, Soo Chong, I mean, it's been a great year for your space, as it were. Are you seeing any, I suppose, light at the end of the tunnel?
Yeah, well, you're right to say. I think Asia credit market has a very choppy start for the year. Year to date, we had lost about 9%, and this is one of the worst years since global financial crisis. We have not seen the kind of spread widening and the treasury sell-off. We are talking about 150 basis point rise in the 7-year treasury, and then another 39 basis point in widening in credit spread. So this is a kind of a double whammy for us for the market. So the last time we see that kind of high single-digit losses is back in 2008, when the JPMorgan Asia Credit Index lost about 10%. So we are inching close to that kind of level. Yeah, but
a lot of that has to do with China too, right, Soo Chong, and what we're seeing in the high yield market, and we continue to see spreads widen there. I'm just wondering, what is your exposure now to the property space in China and beyond?
Yeah, well, China property definitely is a topic people all discuss about, and then what we're going to do with that space. Based on the current valuation, I think most of the China property bond are trading at distress level. Some of them, anything that have distress, they are already trading 15 to 20 cents level. So the question is that what is the recovery value? I think we are hopeful the recovery value is definitely going to be slightly higher than that, as long as the company go through the proper process. Yes, I think offshore creditor is subordinated, but as long as they are traded fairly, I think the recovery value should be better than what we are current trading at 15 to 20 cents per level.
Soo Chong, you mentioned distressed and distressed debt. I mean, do you look at distressed debt in real estate in China, or is it something you just think is perhaps you'd be on a hiding to nothing? And I suppose you have to be prepared for near-term volatility and more here. So where else would you look for opportunities in that space?
Yeah, well, I think beside the China property, I think there are people looking for outside the China property space for diversification in the higher space. There's a few, you can say the kind of sweet spot for investor. Either you're talking about commodity names or renewable in India, Indonesia. These are the space that people kind of generally are looking at reassessing it, and this is a space that people are willing to put money to work, and this is the alternative to what you have in China property. So that is the space that people are looking at. But even in the investment grade space, for example, I think right now the investment grade has sold off quite a fair bit because of the rates move. So nowadays you can get single A closer to a 4.5%, and triple B is going to be closer to 5 to 6%. I think those are levels that start to look interesting also. Yes, there will be some short-term volatility, but I think the valuation have reached a level that people started to relook at the whole space and in a different valuation parameter.
How do you factor in the dollar dynamics, given that there's still a lot of questions on greenback dominance? Is that still reigning high? Do you just focus on local currency, or you focus on the dollar bond market now?
Yeah, our focus is really on the US dollar bond market. This is a space I think still attract a lot of attention. Local currency market, you rightly say there's lose some shine, but I presume that is more, you can say is a temporary thing. In the structural term, I think eventually people have to start to look at local currency, and that will eventually come back. In the near term, probably people are focusing a lot more on the US dollar product for sure, but eventually I will still expect that people will also relook at the local currency market once the rates stabilize somewhat. Yeah.
Soo Chong, which is, you must be listening to your clients here. What's their number one concern, and what do you tell them?
Yeah, well, there's many concerns. I think you have highlighted a few. We discussed a few. One is actually the slowdown in the China economy. That is still something that we have to deal with in the near term. Where we see the bottom. This is one question, and the other one is probably also inflation and how this inflation is playing out. Have we seen the peak inflation? And the other part is also in the broader context, what is happening to the global economy? Are we seeing will we see a hard landing or soft landing? Those are questions that people are thinking about. Yeah. So another thing is also for Asia, we have to deal with the rising default rate. That is still something that not behind. We still expect a few default here and there, but overall we see that there are still some light at the tunnel, as what you said. Valuation have cheapened. Technical have improved quite a fair bit because the supply have moderated quite a fair bit also.